You are looking at a point and figure chart of the Dow Jones Industrial Average. I am Bagadon at StockMarketCaddy.com. And over the next 10 minutes, we are going to look at the Dow Industrial, the S&P, the NASDAQ, the Wilshire 5000, and lastly, the Russell. And stay tuned for the Russell. Now, if you don't know how point and figure works, you're really missing a fantastic way to read the markets. Many people say that point and figure takes out all the noise, all of the noise. I'm looking at this point and figure chart courtesy of StockCharts.com, and this is actually a free tool. Now, we do have available on our website at StockMarketCaddy.com a DVD set where we teach people how we use point and figure. But the beauty of point and figure, if you know how to use it, there's no gray area. For those that are trained in point and figure, the buy point is the buy point. The sell point is the sell point. There is no interpretation. There is no gray area. So in looking at the industrials, and although time is reflected on the chart, it is not a linear time chart. It is a price chart. And prices move how? Up and down. So the Dow Industrials closed on Friday at $26,458.31 right here. The last signal was a buy signal right here. The signal before that was a buy signal right here. If you were schooled in point and figure, you would have been buying here. You would have been buying here. And she is on offense. The last sell signal was down in here, and it turned out to be a trap. It was a huge area of consolidation, what we call a triangle, and then she busted out. The best buy was at 24,450, and she's catapulting. Now, this on the Dow Industrials is not a crash scenario. It is not. I wish it was, but it isn't. The best one can hope for is a reversal and a pullback. And let's see if we can put a reversal marker on here. Bear with me. I think we can. No, unfortunately we can't, but on this particular example, but the reversal would be 1, 2, 3. If she traded down here to approximately just underneath 25,000, that would be a reversal, a pullback. Is it likely? Probably, probably up in here. We are up at all-time highs, but it would be a pullback. She would have to break 24/7 from here to generate a sell signal. That's not so likely. We would be more apt to pull back and consolidate and make another consolidation area for maybe a break up higher or breakout. So it is not on the Dow, it is not a crash-like scenario. Let's put in the Wilshire, because the Wilshire is the Wilshire 5000 stocks. 5,000. Now, for those that subscribe to Stock Market Caddy, we really get into the granular look. I mean, we use our proprietary systems. This is a very broad picture. The Wilshire 5000, the last signal was right here. It was a buy signal at 29,500. She's currently at 30,259 and is off its high. Its pullback mark would be 1, 2, 3, 28,500. She would need to break 27,000 to generate a sell signal. And because of this area of consolidation, And because it did break out, it would constitute a failure. A break of 27,000 would precipitate a crash-like scenario. Would be a huge break. The reality of it is, on these point and figures, you can come all the way down to the blue line, wherever that is, and the uptrend still be in place. So this would be roughly a 20% correction, and the uptrend would still be in place and probably healthy. Has the pullback started? Not according to point and figure. Let's look at the SPX, the S&P 500. Now, the S&P 500 closed Friday at 2913 at its all-time high. Anybody and everybody who ever bought a stock in the United States in the history of the country is a genius, even if they bought it on Friday. That's scary in and of itself. But the last buy signal was at 2850. The buy signal before that was 2490. It would have given you 400 S&P points if you knew how to use point and figure. By the way, the DVD set on our website is listed, I believe, at $350. If you get electronic version, it's $300, and if you're a member, it's $250. Worth its weight in gold. Now, in order for this just to pull back, we'd have to come back 1, 2, 3. We would have to be trading underneath 2750 for a pullback. Is it likely? It's the most extended market in the history of the S&P. Its trend line is down here at 2290. If it did pull back, it doesn't generate a sell signal unless it breaks 2600. So the first is the pullback. If she did break 2600 because of this consolidation, our experience is this would be a crash-like scenario. The reality of it is it could come all the way down to 2290 and the long-term trend still be in place. But you can just imagine, CNBC. So right now, though, she's still on offense and is showing no signs of pulling back yet using point and figure. Now, we're not going to comment on what we do here. If you want to join, you feel free. If you like this approach to the markets. So now let's look at the NASDAQ. We update. That wasn't the NASDAQ. I'm sorry. Let me update this. Now the NASDAQ is doing something that the other markets are not doing. The NASDAQ is making a high level consolidation, a little triangular pattern. She's trading at 8046. If the NASDAQ breaks above 8150, she could catapult higher. Okay. The last signal was a buy right here at 7950, and she's been consolidating. However, because she is so extended, if she breaks 7900 right here, where she was recently at, it would be a crash-like scenario. Because the reality of it is she can come all the way down to 6150, 6150, and still be in an uptrend. Can you imagine? This was a buy. The last sell signal was down in here someplace. But here was a buy, here was a buy, here was a buy. The best buy was right here at 7200. Gave you almost 800 points. Now let's look. We've done the Dow Industrials. We've done the Wilshire 5000. We've done the SPX. We've done the NASDAQ. Now let's look at the Russell. Now the Russell is in a pullback. She wasn't, but this month she is. She's at 1696. You can see this consolidation that she had done. The best buy was right here at 1600. And then there was another buy here. But she ran up. She has, in fact, pulled back. For her to generate a sell signal, she'd have to break 1660. And if she did, because of this consolidation, because of the false breakout, the reactive low would be a crash-like scenario. Now, we think the Russell is important because there are a lot of small-time speculators, and the speculative class likes to get in here, and a lot of times the Russell leads up, and the Russell can lead down. So this may be an early warning to those that are in the S&P that the market is gearing up to pull back and maybe press on these sell signals. That's the extent of what we can draw from this. Now, you need to be schooled in point and figure to probably understand this, but stocks, individual stocks, have point and figure buy signals. And when the market is making new high and 80% or 90% of the stocks are in what we call bullish percent buy signals, it can be very healthy. It can be extended, but it can be very healthy. In January and February, the markets were at highs and the bullish percent was around 80. It's very strong, but it was really extended. Today, the markets are where they are, up at their highs. These are all the stocks. The bullish percent index is at 60. There's two ways to look at it. One, you could say that the rest of the stocks need to catch up to the market, which they would, and we could go even higher, but they're going to improve. Or two, you could say that the markets are running on helium, or the TWA 800 analogy, where the nose cone of the plane has come off, but the momentum has sent the markets, the indexes, higher, because only 60% of stocks are under a bullish percent buy. The rest are in sell mode. That cannot sustain itself. And that's where Stock Market Caddy, we use the tools that we use to trade these markets each and every day on a daily basis, weekly basis, even a monthly basis. But the conditions, the internal conditions of this market, just like the internal conditions of a hurricane, cannot sustain. Just like a hurricane needs warm water, the indexes need the underlying stocks to move into bullish percent buy signals. If they do, we will sustain these high prices and go higher. If they don't, this hurricane of buying, this hurricane of higher prices is going to rip apart. I'm Bagging On at Stock Market Caddy. We post for our base members a 1-hour video where we slow everything down and go into great detail on Sunday night, and then we stay up with the markets, what the markets are doing daily on a Monday, Tuesday, Wednesday, and Thursday. By the way, if you want to see this in high definition, our video hosting is much better than YouTube, but on YouTube you'd want to increase your setting, and I suppose I should have said that up front. For our level 2 members, they get to see our real-time signals that we're trading from day in and day out. They also get all of our proprietary indicators and strategies. And do we trade point and figure? Oh, absolutely we do. In fact, we trade it in an automated fashion on an intraday basis. And we trade a whole host of other approaches as well. Our strategies are back tested and forward tested so that we have a pretty good idea before we commit our time and our capital to what works and what doesn't work. I'm Bagger Don at StockMarketCaddy.com. If you like this approach to the market, cut out all the bullshit, all the noise, all the Hindenburg this and Hindenburg that, feel free to give us a call, 813-758-8263. I'm Bagger Don, StockMarketCaddy.com. Good luck. Hope to hear from you.